Okay. Hi, everyone, once again. For those of you who have been definitely on the first economic data release from UK, and me and my colleague Max are here today again to discuss the data release. This time it comes from the United States of America, definitely, and we're going to discuss the U.S. CPI, month-on-month core CPI, definitely, and basically on this chart, I decided to have a quick look on the CPI in particular, but we will definitely discuss the core one and the yearly one, I think, as well. Okay, so basically the forecast stands at 0.2%, and prior figure stood at minus 0.2%. Consumer prices in the U.S. declined 0.2% in September, while core CPI, including the volatile food and energy sectors, gained 0.2%. Analysts expect CPI to drop 0.2%, and core CPI was predicted to rise by 0.1%. Despite the fall in headline inflation, core prices edged up 1.9% in the past 12 months from 1.8% the prior month, getting closer to a December rate hike call. The energy index plunged 4.7% in September. A continuing decline in the gasoline index, this time by 9%, was the main cause in the decline for overall CPI. Both CPI and core CPI are forecasted to rise 0.2% in October. Okay, so let's move on. And by the way, guys, in the chat section, in case you're wondering if you have any questions, comments, we'll be very happy to communicate, definitely to address them and to participate in the live discussion altogether. So here you can see top 10 economists, or even more, surveyed on the matter by Bloomberg on the definitely CPI. And according to their views, we have the Bloomberg survey summary where the median estimate stands at 0.2%, average estimate stands at 0.16%, high estimate stands at 0.3%, and low estimate stands at minus 0.1%. And this time the number of estimates has reached 82. So, talking a little bit more, so things to watch, basically, the manufacturing component of the Fed's industrial production has declined, for which data has been released, and now we will definitely proceed with this. Basically our community members, Dukascopy community members, poll on the impact on the US dollar, Japanese yen this time. And as you can see, the forecasts tend to the green side, that is the majority one with the bull, 66.09 versus 33.91% bearish votes, and we have a couple of comments. For example, Tanya says that the dollar has been the biggest rise tonight in 7 months, but inflation still remains low, and the Fed, despite the expectation for December, in my opinion, will keep the interest rate unchanged. That's according to Sonia Trader, and thus she is bearish on the greenback. And Abuzara says that a small expected difference between actual and forecast rate may make an interaction between indicator, and he believes that it will lead to a bullish move. So I guess that pretty much covers the fundamental of this data release, and I would like to invite Max to continue with the technical part.
Thank you very much, Polina. Hello again, everybody. I hope you still have a great Tuesday. Yes, right now we are discussing the US CPI data after we discussed the UK inflation data just earlier today. And here, actually, the expectation is slightly more positive than for the UK. because first of all, we are watching here mainly the month-on-month change in inflation and the consumer prices in the headline reading, and it is expected to rise by 0.2% in October after a decline of 0.2% in September, as Paulina has just already mentioned. At the same time, we are going to watch closely the core reading on the annual basis, because any positive surprise may bring the core reading to 2%, which is the target of the Fed at the moment, and it will be really interesting to see this indicator as well, because it is going to influence the Fed decision on interest rates next month quite a lot. Okay, since we have a positive expectation for month-on-month headline change, we also have the positive surprise trading strategy and the US dollar-Japanese yen currency pair for discussion. Despite all, the sentiment on this currency pair remains bearish in 64% of all the cases, but I should say that the sentiment has improved in the past 24 hours, because yesterday more than 75% of all positions of all open trades were bearish. Now it's only 64%. Speaking about pending orders and sentiment provided by other market participants, you see that the readings there are more positive than the sentiment of our traders at the moment. Okay, and now let's move on to the current trading strategy and the current market situation. You can see that the pair is trading at 123.20 level at the moment, and as usual, to project the possible market reaction after the data is released in around 3 minutes from now. Let's have a look at the previous market reactions for the same data release and the dollar-yen currency pair. And the average reaction actually used to be 22 pips, and it ranged from just 10 pips back in July and up to 29 pips last month, when we saw the headline month-on-month inflation dropping by 0.2%. Okay, nevertheless, if we take into account this average reading as the benchmark, we can project the possible first take profit level to be placed around a very important resistance zone at 123.40, because there we can see the location of the weekly and the 4-hour R1 resistance lines. Also, in case we see some better than expected surprise from inflation, or as I have also said from the core annual reading, if in case it reaches 2% today unexpectedly, we also can see the dollar-yen going upwards even higher, possibly to the second take profit zone at 123.55, where we can find the daily R1 resistance line and also the 4-hour R2 resistance line. Okay, but still, if we have possibly the negative data, we cannot exclude, we cannot avoid such scenario. We can see, in this case, the pair dropping down to the area of 123 major level, or even below this level if data really disappoints us today, because it will automatically decrease odds for the Fed rate increase in December, because inflation is one of two benchmarks the Fed is always watching, along with the labor market, of course. Okay, since I have just 1 minute to go, I will mention the technical indicators for the dollar-yen currency pair, and as you can see, they are mixed on different time frames. So the 10-minute ones are bullish right now, while 30-minute ones are pointing to the downside. So there is no unanimity in terms of technical indicators. But of course, everything will depend on the data. On the both headline readings, the core readings, the monthly readings, and the annual readings. We have 4 of them, and I hope that all of them will be published in the chat section. So we just have some 10 seconds to go till we are going to have the date in the chat section, and we will see the first market reaction from the dollar-yen currency pair. So let's just wait for a couple of moments. We see at the moment the pair going slightly upwards because actually the US CPI month-on-month headline reading was published in line with expectations. At the same time, the annual reading, as you can see, it exceeded the expectations and rose by 0.2% in October versus the 0.1% expectation among Bloomberg surveyed analysts. And concerning the core readings, there is no surprise on both the monthly and the annual readings. So the core CPI stayed unchanged on a monthly basis at 1.9%, but it is still very close to the Fed target of 2%, and possibly since the energy prices actually have stabilized since the beginning of this year at these low levels of $40, $45 per barrel, it is quite likely that the headline reading will also adjust to the core reading in the nearest future, and will also start growing gradually to the 2% target of the Federal Reserve. But still, we have a positive surprise on the US annual headline reading for inflation, and it will be interesting to see whether odds for a rate hike in December will now increase from the current level of 64%. If I'm correct, they are now at 64%. And speaking about the initial market reaction for the dollar-yen currency pair, it wasn't that strong as it could possibly be anticipated. So the overall reaction was some 16 pips to the upside, but still positive reaction from the US dollar. Okay, I guess that for now it will be all from my side. Also on the technical part for this particular data release. Thank you very much for listening. I wish you all a great day ahead, and of course profitable trading. See you all tomorrow, and now I give the floor back to you, Polina.
Thank you, Max. Wonderful analysis. Definitely, I don't have that much to add. You saw the numbers yourself with your own eyes, and you can still see them as well as the reaction on the Max's screen, US dollar, Japanese yen, and basically that's it from our side. I hope it was useful for some of you. Definitely very nice to see some old faces, not exactly old, but familiar. Sorry, familiar faces, as well as the newcomers, definitely. So guys, if you have any questions, comments, feel free to share them. And meanwhile, I would love to invite all of you to, Max has a question already, to the continuation of Doc Dow's webinar live from North America, please.
Alrighty, thank you guys. Some fundamentals. I can see it made a nice little dip for the euro. Nothing major, just a little swing down. Looks like it chewed up about all the gains over the last, I guess about 2 hours. Just took a swoop down. You know, anything that CPI up 0.2 in the States, you know, all of a sudden it gets excited. They start thinking interest rate increase again. I mean, it just, this dance goes on, and we have to put up with it. I know it's very hard for all of us to try to, you know, follow the internals, I guess you could call it. No, it's not even internals. The statistical information, the actual information that supposedly has price discovery, you know, the consumer price index itself, year over year up 0.2. So, you know, it kind of, you know, the next story could knock it down. It's awful hard. You know, in other words, these numbers at this point in time, I always say is worth the binary trade. It's pretty much what it all seems to come down to. What you do is you put a binary on a minute or two before the action comes, and it makes it easier to see it execute. Most of these numbers now seem to be screaming at us and telling us that binary trading is the answer to these little news dumps, because every one of them can excite traders or excite the positions. You know, they adjust them. You know, funds have to adjust them on some level. Again, we've always talked about this before, and that is that, you know, funds are just not there to basically make trades from the seat of their pants. In other words, you know, just what they feel like after a few minutes. But what it is that they have a manifesto. When they incorporate, they've told their investors years ago how they're going to invest. And some of these funds actually talk about, like, you know, CPI and PPI. They get very elaborate. They get very sophisticated. So when a statistic comes out, they have to move their position around a little bit, and that's why we see these little surges or slides, is because the manifesto of the particular fund has to make a particular move when that number comes out a certain way. No, it's a yes or no, or up or down, or buy or sell. That's what it really comes down to. In this case here, there are some funds that actually have to follow the internal, or the labor, or the statistical numbers themselves out of the official government numbers, and they're incorporated specifically to invest that way. And when they don't invest that way, they get sued by the investors. So the money managers will just make those trades. They will just blindly go in and make those trades and say, okay, this is what it is. And that's how they usually work it. So that's why we see those little moves. And for the simple intraday trader, the answer to it, I think, is binary options. You know that the CPI is coming out on November 17th. Was it 12:30 GMT? And so you put a little binary position on and play the market to it, and that's usually the way it goes, and then makes the execution a lot easier. Anyway, that's a little commercial for Dukascopy and binary options in general. Just a little idea there. All right, let's get back to the where were we? We're looking at crude oil this morning. Let's see if that news made any effect on crude oil. Crude oil did bounce up a little bit because that means that the economy's growing. So when Polina and Max came on, we were looking at a crude oil trading at 41.31, and now we see a crude oil trading in the 50s. Right there, now it's dropped underneath the 50, or it's right at it, 50 there, and you can see that little news meant, hey, guess what? Some growth. Oh my God! Quick, buy it before somebody else buys it. That's pretty much. It's kind of like the seagulls on a beach. You know, the birds going, rah, rah, mine, 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 as they would say in Disney. All right, let's jump over to line 6. That's gold. Gold. 4 weeks in a weekly sell. We are looking at 22 days now in a daily sell. Let's put the poor thing up on the chart.